Welcome to the SBI Securities Weekly Market Podcast with me, Sudeep Shah. Hope you are having a fantastic weekend. Now, today we would be discussing about what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that could make a move from here on post the monthly rollovers. Now, last few days, definitely the market trend has weakened, and we have seen all the major indices Nifty, Bank Nifty, Mid Cap Index, Small Cap Index all losing approximately 2 to 2.5% for the week. But it was post the monthly rollovers on Thursday that on Friday we saw some kind of a rebound in the indices from oversold zone, and Nifty managed to once again close above 19,000 levels and Bank Nifty above 42,750 levels. Now, globally too, also if we see the equity markets are under pressure with the US 10-year bond yields rising once again towards 4.9, 4.95 levels, and also the dollar index sustaining above 106 levels. So I feel one needs to be a bit careful with respect to over leverage positioning. However, there is one positive, that is the Brent crude oil prices in the last few days have stabilized around 88 to $90 a barrel. So overall, we feel that these macroeconomic pointers, especially the US 10-year bond yields, should be closely tracked, as it would continue to act as a key catalyst in the market momentum going ahead too. Now, coming to our markets, we have seen in the last 10-15 days, Nifty was unable to cross this 19,800 850 levels, and thereafter it has witnessed a sharp correction of over 1000 points in the last 7 trading sessions. So this fall has led to the index trading below its 20, 50 and 100-day EMA level, which is a bearish sign from medium term perspective. However, it is the 200-day exponential moving average which is placed at 18,830 zone, which has acted as a last line of defense and has given some hope to the bulls, with Nifty taking support near this zone and witnessing a smart rebound on Friday. But still, on a weekly scale, the indices have formed a bearish candle with a lower shadow. On the rollover front now, for the first time in 6 years, Nifty has ended the October series on a negative note. Now, Nifty Futures has witnessed higher rollovers at 83% compared to the previous month's 76%, and it's also well above the 3 months average of 79%. And these higher rollovers, along with the sharp decline of 3.5% for the series, is indicating overall bearish sentiment and positioning on the short side. But if you look at the momentum indicators and oscillators on the charts, they are displaying some different picture. So let us just see what the RSI has to say. Now, if we see the daily RSI, it has fallen below 27 levels on Thursday on the expiry day, and this was the lowest level since COVID fall. Even the daily stochastics has given a bullish crossover in the oversold zone. Now, add to that, in the new series, FII's index future based long short ratio is at 11%, 10.87% to be precise. Now, this is the lowest since 29th March 2023. So this means only 11% positions of the FIIs in index futures is on the long side and 89% is on the short side. So this data is clearly indicating bearishness, but it does not mean that we should build aggressive short positions in the index right at the current levels. Now let us also see what has happened in the past when the FIIs were massively short to this extent. In March 2023, when FIIs were just 9% long in index futures and 91% short, Nifty thereafter had rallied 800 points. In September 2022, FIIs were just 13% long and 87% short. That time, post that, Nifty had rallied around 850 to 900 points. Also in June 2022, FII longs in index futures were merely 15% and 85% short positions were there. And post that, Nifty had rallied 1150 points. Also, it is important to track the volatility index. Now, when we are talking about a fierce fall in Nifty, it is very important to track what India VIX is doing. So, despite this fall in Nifty, we've seen India VIX still consolidating in this narrow range between 9.5 to 12.8 on the upside. Now, this consolidation is happening since last 102 sessions, and India VIX is not able to break out above this zone of 12.8 13 levels, which is acting as a crucial resistance, it being the confluence zone of 200-day exponential moving average as well as the previous swing high. So we feel till the time the levels of 13 are not taken out on India VIX, from here on we might see some retreat in India VIX towards the 9.5 10 levels, and because of this consolidation in India VIX, it could provide some comfort to the Nifty at lower levels. Uh, In all, these technical and derivative factors are indicating that it's time to be a bit watchful on taking aggressive short bets at current levels, as we could witness some short-term consolidation or minor relief rally in Nifty, and risk-reward ratio towards creating fresh shorts would be unfavorable at current junction. Now, talking about key levels from a short term perspective, the zone of 19,100, 19,120 will act as an immediate hurdle for the index, as this is the 23.6% Fibonacci retracement level of its prior down move from 19,850 to 18,837 that we have just witnessed in the last few days. So, this zone of 19,120 will act as an important resistance. Any move above 19,120 will lead to an extension of this current pullback rally up to 19,300, 19,350 zone. Now, while on the downside, any sustainable move below the level of 200-day exponential moving average, which is placed around 18,830, will lead to the resumption of the down move up to 18,600, 18,650 levels. Talking about the option chain for the next weekly series, on the call side, we are seeing 19,100 and 19,200 strikes having the maximum open interest, while on the put side 19,000 as well as 18,800 strikes are having the significant open interest built up. So based on this above data, we feel that the overall range for the November series, at least for the first 10 days, could be 18,650 on the downside to 19,350 on the upside. Now, coming to Bank Nifty, the rollovers for the banking index were lower at 79% as compared to 85% of the last month, and also it was lower than the 3 months average of 81%. It has strongly underperformed Nifty for the second consecutive month, losing over 4.5% for the series. Now, while Nifty has taken support at its 200-day EMA level around 18,830 and witnessed a strong bounce back on Friday, Bank Nifty, on the other hand, has breached its 200-day exponential moving average, and for the first time after March 2023 has closed below 43,000 mark and has retested its 6 months lowest level. So going forward, key hurdle now would be 43,100, 43,200 on the upside, where this 200-day exponential moving average is placed, and sustaining above this zone, Bank Nifty could witness a short covering move up to 43,700, 43,900 on the upside. Key support for the banking index now lies around 42,150, 42,200 zone, and in case this zone of 42,150 is breached, then further selling pressure up to 41,500, 41,600 could be witnessed. Now, looking at the option chain and the open interest build up, significant OI build up is witnessed in 42,500 puts as well as 43,000 and 43,500 calls, which implies that the trading range could be 42,100 on the downside and 43,350 on the upside, followed by 43,750 levels. Now, coming to stocks and sectors that are looking positive, few stocks that we like basis the rollover data and on the charts are Bajaj Auto from the auto space, Axis Bank from the banking sector, which has announced excellent results. Also, if we look at the PSU banking names, PNB and Canara Bank has announced good numbers, and we saw excellent momentum in those stocks on Friday, and looks like that this rebound move in both these names could continue in the coming week also. From the IT space, HCL Tech amongst the large caps and Birlasoft amongst the mid caps look really stronger. From the NBFC names such as Shriram Finance, L&T Finance, Muthoot Finance, they seem ready for a fresh breakout on the upside in the next week. Apart from these names, few stocks, CPSE names such as Coal India, NTPC look good, while Kolpal and Ajanta Pharma also has witnessed a good traction on Friday and should be on our radar for the next week. So just to summarize, key hurdle for Nifty going forward would be around 19,120 on the upside. Once this is crossed, then the rebound rally could continue up to 19,300, 19,350, while the key support on the downside would be around 200-day exponential moving average, which is placed around 18,830. And in case if this is breached, then 18,600, 18,650 could be on the cards. Bank Nifty, key supports are around 42,100, 42,200 zone, and hurdle would be around 43,350 levels, followed by 43,700 level. So, friends, that's all for this week. Wishing you all an excellent weekend ahead. We hope you enjoyed listening to our podcast and are finding it useful for your trading decisions. Kindly do subscribe to our channel for such updates and interesting insights, and do share it with your friends and relatives. So, until we meet again next week, happy trading and stay safe. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.